Welcome to our master planning program where we focus on educating, empowering, and supporting local business owners in their transition processes. With us today, Reid Riker Accountancy. And Reid, thank you very much for joining us.
My pleasure. Thanks for having me.
In today's world of working with business owners and just everything that's happening with succession planning these days, there's this heightened awareness of the baby boomer generation and all of the businesses that need to have something happen to them over time, whether they transfer internally with the family or employee, or whether an external transfer. Can you shed some light on the value of working on a team with other professionals around these business owners, and how view of some common challenges you see and how you could maybe help mitigate some of these challenges?
Yeah, absolutely. And so when it comes to working on a team, every team member has their strength. So common team members are CPAs, attorneys, financial advisors, and sometimes there's a specialized industry contact that people have. For instance, I have a dental client, and they have someone that they work with specifically in the dental industry that can provide deeper information. So the importance of having that is everyone has their own strengths. So for instance, when I advise clients to set up a retirement plan, a question I get asked almost all the time is, well, Reid, can you set that up for me? Or, hey, I advise them to set up a trust because it's just good for succession planning and making sure that your heirs avoid probate. And a lot of times they'll be like, Reid, you can set that up for me, right? I'm like, well, thank goodness, no, I can't. And so everyone has their strengths, and so I advise on the tax areas, and then working with an estate planning attorney, I speak the same language, and they speak a little bit of mine, so there's a bridge there. And with a financial advisor, they can advise on a lot of investment strategies that, out of liability and other considerations, I wouldn't want to, but they can kind of time that with a CPA's advice. And again, if a business owner works in a specific industry, whether it's medicine or remediation, everyone has their specialized kind of advisors in that field. So pulling from multiple groups is important. Communication,
right? We've got these multiple people. It sounds like you wear multiple hats, or people want you to wear multiple hats. Right. But the communication and the importance of that over time can help mitigate a lot of potential issues down the road.
Absolutely. Yeah. And one of the points that I stressed on earlier was the value of time in exit planning. And so having your plan 5 years out rather than 1 or 2 years out, I mentioned that time can be your best ally or your worst foe, and doing it ahead of time so that your succession planning goes right and you get the most optimal results is important. So, and communication with your professionals so you're not rushing these things is crucial.
Absolutely. One of the questions we ask that seldom gets answered, yes, I know the tax implications of what a sale of my business would mean to me, is usually the answer is no, I haven't looked into that. So how can you shed some light on just the value of knowing cost basis? Hey, if you sold, here's what you would net. How often do you get asked?
One of the biggest assumptions I usually see is clients think that their business is worth X because of Y. Usually it's because of what their earnings are, what their just gross revenue is, and they have no consideration for, it's not necessarily their fault, they're just not as familiar with it. They just don't think of liabilities and equity and how much they actually have invested. So communication with CPA can really figure out what your existing equity or cost basis is in your business, so that when you sell it, you're not surprised by the tax implications. And so common meetings with your CPA from year to year, even before considering to sell, really understanding the balance sheet, just not going too deep into it, but understanding the different sections and what it really means. We spoke a little bit about the statement of cash flows earlier, and I would recommend that business owners jump into that, because some business owners don't know what that is, and it pretty much shows you where the cash goes, and that's, of course, very important.
Mm-hmm. And that directly flows into working with your financial advisor and knowing, well, how much money do I need in retirement? And so connecting those two pieces of information between professionals and having good communication is a great start to know where you need to be within your projected time frame. So knowing some of this information and moving on from there, what types of things can a CPA assist with in helping a business owner focus on maintaining value and the stability of the value if they don't know exactly when they may be ready to transfer the business?
Right.
What kinds of things could they focus on for maintaining value?
Yeah, absolutely. So part of meeting with your CPA, whether it's during the exit strategy phase or whether it's just during tax time, is education on what the driving factors are in the value of your business. So that sounds very general, but typically there are three valuation methods when it comes to selling your business. One of them is based on the capital assets in the business. Another one is based on earnings. Another one is a function of earnings. And knowing a business owner knowing where the value is when they're looking to sell will help them maximize what they want when they sell. So for instance, if the main driver of their business is not actually the equipment, so let's say it's a dental practice, the equipment is an important part, but it's not necessarily the driving factor in the value. If they can find out where their seller's discretionary earnings are computed, that helps figure out where they can maximize the value. And so that's why having enough lead time, not just 1 or 2 years before the sale, but 5 years, they can help build that up, so when they do sell, they're a lot more satisfied and they don't have regrets about selling in the first place.
A lot of us have heard the term of multiples. Multiples of what? Mm-hmm. And how important is EBITDA in this conversation?
Very important. So when it comes to your earnings before taxes and depreciation and all that, it's a lot of times a measure. It's somewhat related to your measure of cash flows, but knowing what you're truly earning before taxes can give you a strong idea of what your business can actually be worth. And one of the evaluation methods uses EBITDA, and if you understand that equation, I say equation, but it's really a matter of just adding and subtracting.
Yeah.
It's not really too hard a concept. And so when you understand that, then you can see what flows into that, and you can adjust your operations so that you can maximize the bottom line, so that when you are selling to a buyer, you are telling a good financial story.
So EBITDA is a look to a buyer at your potential profitability. Mm-hmm. But even maybe more accurate than that is what we call recasted EBITDA. Mm-hmm. Can you comment on how important that is versus just EBITDA?
And recasted is not something I see too often, mainly because I see predominantly the basic book side or the taxable income side. So when it comes to recasted, explore that a little bit.
Is that something you help with clients? Recasting EBITDA is when say a business owner is actually paying for expenses that he may benefit personally from. Oftentimes, business owners will have personal insurance policies being paid for through the business while they own that. Maybe paying something for a family member, maybe paying them maybe above market rents because they own the actual property. Yep. Backing all those things out.
Absolutely, yeah. I hadn't seen the frame used too much, but when we were configuring and calculating SDE, seller's discretionary earnings.
Yep.
We take the bottom line, and then we're like, okay, here's the officer's salary, here's the rent that they're paying, and they're paying life insurance, health insurance, and XYZ. Then they're like, oh, this is how much you're actually really making in that, because sometimes an owner will look at the bottom line and be like, I thought it made a lot more, but this SDE or recasted EBITDA really helps in educating. And really, education and knowledge for a business owner is the most important part, because having a nice sales price is nice, but if they really know what goes into it, then they're more satisfied at the end.
Depending on your industry, as to what multiples applies to your industry is very specific. So knowing where to apply those multiples and how your business in your industry sells is very important to be doing in advance and doing some education. Your financial professionals around you are a great source for that education. And thank you very much, Reid, for being with us today. And thank you for listening.
My pleasure.